Well, hello. Welcome, Currency Recap time. Let's do it. It's July 11th. Joe with you here on a Thursday, and we've had a pretty exciting couple of days. Today is kind of the subsequent pull after a push. What do I mean by that? Well, we'll get into it. Make sure you take responsibility for the outcome. You guys understand this drill. First thing I want to do is get over the meaningful news of the day, and then we'll take a look at the charts here technically, and let's always share trades.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, we are going to just straight up go to the corrective action in the U.S. markets. Today was a pretty aggressive corrective action in the S&P. Well, I should say the Qs, which is the leader, the tech and the telecommunications, gave up almost 2%, about 1.95% in the day. The S&P almost did 1%, and the Dow kind of hung in there and stayed flat. So it was an absolute corrective day. The reason being is because what was leading is actually pulled back, and what was lagging is actually bouncing. Completely opposite of what we saw yesterday as we broke out into new highs. The US CPI comes in lighter than expected, increasing the possibility of rate cuts. The expectations were for maybe a rate cut into September. This actually could argue the end of July. Remember, Powell had his statement, came out and said that, hey, look, I don't need to see the 2% target inflation for us to maybe cut rates. And I think it could have been in anticipation of the CPI number, which came in substantially lighter than expected. At the same time, the GDP strength pushed the Great British Pound higher. It was already moving higher. I think it has to do with that time change. It's 2 a.m. here. Maybe I was a little bit behind on that. But it does show that there's some increase and some strength in that sterling. Now, what do you think that did to the overall markets? Well, it was pretty obvious. The yen had a massive bounce, and I'm going to show you that chart. That's one of the first ones I'm going to look at because it was oversold, and we've seen this before. The dollar slipped a little bit with the anticipation of, hey, we could get rate cuts, which would weaken it against some other currencies. Now, I did move the dollar from a 0 to a -1, which does create a couple of good trading opportunities, specifically with the pound. The pound didn't do too much today. It just kind of stayed up where it was because it is indeed one of the strongest currencies out there. CAD dropped a little bit, and the Australian dollar and the New Zealand yen continues to slip. So not a lot of change. The biggest change, I do believe, had to do with that CPI number at the U.S., which created a huge bounce in the yen and a little bit of a slip in the U.S. dollar. Past that, it was just corrective action. Here's the SPY, or the S&P, you can see down 0.88%. World index just dropped slightly, and then crypto had a bounce. Gold had a pretty good bounce, and you knew that would happen, especially when there's anticipation of weakening dollar. If the Fed is indeed going to cut rates, I think gold is just going to get ahead of it. Gold really hasn't been doing much until actually today. Now, will this sustain? I don't know. We'll see. Bitcoin, Bitcoin Cash, Ethereum, Litecoin. Okay, Bitcoin, of course, slides a little bit, but Bitcoin Cash had a pretty good push to the upside. Now, this is misleading because these charts, in my mind, folks, are all basically -1, -2. I'll show you here in a second, but they are super volatile. But everything just kind of reacted to that CPI number and kind of a counter reaction to what we saw yesterday. So we'll go straight ahead and just take a look at the chart. However, the market outlook has not changed. We do have a bearish engulfing candlestick, but it is so far extended from that rising 20-day moving average. I really can't move it off of that +3. So let's just jump straight into the chart itself. Now, what I'm focusing on is I refer to this as a push-pull, and we see this quite a bit. When we see a market push-pull, it's usually the beginning of a correction. Not the end of the world, the beginning of a correction. Big difference. This correction didn't do anything but go sideways. Here's that nice breakout that we've been talking about. And yes, we were absolutely due for a correction. Now, folks, I was looking at it here. I do not just the currency side, folks, but I also do the equity side. I anticipated a corrective action Tuesday or Wednesday, and obviously I was wrong. We got one more push higher. Well, now we have this inside day, or I should say engulfing day, which could be the beginning of a correction. Now, this correction could last for a little bit. It just depends on what these markets want to do. Understand, even if it pulls back all the way to this level, if it pulls back, we've only got one day tomorrow, but we could pull back again Monday and Tuesday, and we hit this higher area. That is a very comfortable bull pullback. We saw something very similar to this here, right? Where it did come back and retest a support level, more of a high base or a sideways move. This could also trail sideways. There's a lot of things it can do. I guess the point I'm trying to make with all this babbling, folks, is regardless of how scary looking this candlestick is, it is definitely still a bull trend. It is a very bullish move. It is a very aggressive pullback, but it is a pullback in all the right places, meaning the overextended tech, the overextended telecommunications. It came off of a pretty strong number on that CPI showing that rates can be cut. And so the U.S. equities markets reacted as such. Well, what does that do to the currency markets? Well, let's dig a little deeper. Let's take a look at our economic calendar. And we talked a little bit about this. Rob made a really good mention about this. I thought that was really cool. On Tuesday, Powell comes out and says, look, I don't need a 2% target rate of inflation to cut rates. I just want to see that things are slowing. Well, lo and behold, guess what happens today, folks? This is our core CPI, expected at 0.2, dropped to 0.1%. CPI month over month actually posted a negative rating. So we are definitely cooling off. It is a very good sign and creates a strong argument that, hey, the Fed could start cutting rates as early as the end of this month. Will they? We'll see. But the markets seemed to really like it. Now, they seem to sell off, but that's okay. I think we were due for that. Absolutely overextended, but it is nowhere near bearish. I want you guys to keep that in mind. Now, tomorrow we're going to have a couple of other things come out, but in light of what I've seen over the last couple of days, I don't think it's going to be too big of a deal. We've got the core PPI and the consumer sentiment numbers coming out, but I think these markets are pretty much on their way to either consolidate after today's move to the downside, or I would not be surprised to continue a little bit lower. But let's not mistake that for just what it is. It is just a corrective action. It is just a pullback. And to tell you the truth, folks, these markets were due for a little bit of a hesitation. So let's just jump out and take a look at some of these currencies that moved. Like I say, I'm just going to focus on the ones that I saw had pretty good reactions to what happened today. The first thing is going to be the yen, and that's pretty obvious, but we have seen this many times. And for you traders that have been waiting to get into this thing short, here's your patience. It's playing out. This is an oversold bounce in light of the fact that the CPI shows slowing, that we could get an interest rate cut, weakening the US dollar, and so the yen subsequently was ready to bounce, and it did. Now, I'm not saying to anticipate a rollover, but hey, put this back up on your radar, folks, because it's back up into one of these bull rallies that we might be able to play up against. The other one, obviously, let's just take a look at the US dollar itself. I'm going to zoom this in. I already drew some lines here. So it's at this channel here, and it looks like it's starting to roll over. One thing that I did like, I'm just going to see if I can't zoom in a little bit more, is I just love this last few days. It was like this was waiting, a nice little bear rally. We already had the crossover in these moving averages, right? And a big day, good volume, and it looks like we could roll over. Now, yeah, I could see this maybe try to come back up to resistance, but as the US dollar itself, I had no problem taking this from a zero and moving it down to a -1 because it is showing weakness. And I actually expect it to continue to stay weak in light of what we saw. The other one I want to talk about was the pound, and the pound looks pretty good here. We've been waiting for this channel to break out for quite some time. So if you guys have been following along with me, it's just been back and forth, and it's finally slid higher. It actually did this yesterday, but it's holding true, right? So this is something we can start pairing. And then the CAD itself is still a zero, but it also showed a pretty good rollover. And I'm waiting to see if this continues to stay any weaker. Now, the CAD hasn't changed from yesterday in my mind. It hasn't yet. It's still a zero. So let's see what it can do. But those are the ones that I'm looking at. Specifically, let's take a look at the Aussie that sits in front of us. The Aussie is continuing to show some strength, and the New Zealand, the Kiwi here, continues to slide. So as the Kiwi slips, I do believe this went from a +1 all the way to a -1. So if this keeps this pattern, we might be able to start to pair this against maybe the euro and against the pound. So some opportunity there. Real quick, let's take a look at the cryptos. And it's so funny because you take a look at these cryptos, and let me just zoom in and give you a bigger picture here, or zoom out, I should say. But when you take a look at it, this is Bitcoin itself. This is Bitcoin Cash, which I believe is the strongest. Ethereum, it's got a good green candle, but look how far it is off of its 20-day and the slope that it has. And then Litecoin itself just rolling over. And this is all against the US dollar. So if the US dollar continues to get weak, these will start to climb higher, but none of them are in an overall bullish trend. If the US dollar has a reaction and then stops and continues to stabilize, well, these should roll over and continue lower. Personally, folks, I'm staying away from all cryptos because the pairings and some of the basic currencies that we trade are starting to look pretty good. So as you can see, guys, I just moved a couple of things around, not a lot. I did definitely have to slide US dollar to a -1. It's starting to show some weakness. It's starting to slip a little bit. I was fine putting Bitcoin to the -2 side, but I decided to keep all the other cryptos where they're at. New Zealand dollar still hanging out at 2. And even though that yen had a really good bounce today, it's nothing but just a bounce. This can be misleading. A lot of traders get into things like this and they realize, oh, geez, this is it. This is the end of that fall. I'm gonna ipso facto and flip things around. Please don't. Make sure that you understand that trend is still there. It was a really good push and pull day. It was really neat to see that volatility come into the equity markets, the U.S. equity markets, and actually have an impact on the currency. So it does create trading opportunity, but folks, to the same direction as we were going to do anyways. Nothing's changed. So what are the possible trades we're looking at? Well, let's jump back out there and take a look at some. Now, first off, let's start with the pound. I thought the pound was showing some strength, right? We like that. But against the CAD, which was showing a little bit of weakness. Now, yes, folks, we're not doing the strongest against the weakest. What we are doing is the pound has finally established itself as this strong upside trade to a really strong currency. It finally pushed higher with that GDP, and the CAD actually slipped. So the CAD is slipping and the pound is showing strength, and I just like the emergence of this chart. It's a nice move. Looks like it's breaking out of resistance. This is the daily, so be patient on this. But I do like the pound CAD here. Yep, it's not the outside currencies, but it's one of my favorites. And speaking of currencies that might be slipping a little bit, I figured since we're here, let's jump into the US here. Let's take a look at the Aussie US. So this is a pretty strong pairing here. I do like the resistance it's at. It seems like I'm chasing this. It's been breaking out for quite a bit. This might need to pull back. But the Euro's another one. It's not quite there. You could see that I kind of want it to get up to this resistance level here, right around this area before we do anything on it. And the pound US looks like it's a day or so late, but it could be sustained. I think it could stay up here. So the only one that I'm actually comfortable going straight at would be maybe the pound CAD. Other than that, I'm going to have these on my radar. Anything with the pound US, if it continues to get weaker, Euro US, Aussie US, things of that nature. So that's pretty much what's on my radar, at least going into the weekend. We'll see what tomorrow brings. I'm not sure if we're going to continue lower or we're going to have ourselves a little bit of a bounce. So overall, guys, let's make sure that you understand this was a strong corrective move, and it did create a little bit of a bearish pattern on the overall SPY, but it could be bearish for consolidation or corrective action. I called for this a couple of days ago. I was also on record saying that I wouldn't be surprised if we got one last little surge to the upside. But that CPI number came in very, very bullish, and the markets were just ready to roll over. This is not bearish in any means. It is just corrective action. But it can create opportunity if we're patient in some of the last pairings that I showed you. So play relative strength and weakness. It is definitely tradable out there. If you guys wanted to zoom a little bit tighter on those 4-hour charts, you might find something in there. But I'm kind of looking into that mid area. I'm looking at pound CAD, right? CAD I put at 0, but you could argue that it could slide over to -1. Or the pound US dollar, Aussie US, Euro US, if the US continues to get weak. So there is opportunity there. Just make sure that you don't create something that isn't. That is pretty easy to do, especially if you've been sitting on your hands for a while. All right, folks, thank you so much for joining me, and we'll talk to you next time. Bye, everybody.